US home sales slide almost 6%, fueling speculations that the market is in a recession. Guys, we've been talking about this every single day. Yes, the housing market has taken a turn. We have now crossed that peak and we are on the sliding side of the scale, right? We definitely went from a seller's market to a buyer's market basically overnight. And I think that the peak was definitely in June, and July was pretty bad. August is not looking so good. And remember, we're going into a winter season where that during the winter always slows down the housing market, right? Because people don't like moving during that time of the year, because for one, the weather kind of sucks in most of the country. It's cold, it could be snowing and whatnot. And then another thing is that kids are in school, right? And you as a parent, you really don't want to move your kids in the middle of the school year if you don't have to, right? And that's why we definitely see a boom in inventory and a boom in home sale prices during the summer, because everybody is rushing to get in, buy a house in June, kind of do some minor remodels in July, kind of enjoy that summer, and then basically then get into that rhythm of paying that mortgage and whatever. But anyways, so things are starting to change. And now let me just jump right into the article, and here's some key points. Home sales in the US fall for the 6th month in a row. The fall now has both realtors and home builders thinking that the market is in a housing recession. Meanwhile, home prices across the country still remain high compared to this time a year ago. Absolutely right. So we had a huge boom come the beginning of this year, because there was definitely fear that the feds were going to start raising the rates. And here, let me just show you. If we jump over to the Redfin weekly housing market data, and we go to median sale price, and we focus on here, sale price. Sorry. Okay, here we go. 2019 is the blue line, 2020 is the red line, 2021 is the orange line, and black line is 2022. If we see how right around this time right here, which was we're coming out of 2021 into 2022, what ended up happening was there was fear that the feds were going to raise the rates. So everyone that was basically seeing the writing on the wall, they're like, hey, we know that the market is in a bubble, but it doesn't matter. We need to get our money into real estate. Why? Because inflation is here, and the people that have a lot of money, rich people and corporations, they invested a lot into properties. So then it made this huge boom, as you can see right here. And then we hit that, and right around here, the Fed started raising interest rates. So they really put the brakes on. And now we're starting to slide down. So we saw a little bit of a brief moment that it kind of slowed down. This is because the banks raised the rates a little bit too fast, and then they kind of scaled them back a little bit. So anyways, we're still seeing a decline, and we are about to cross that 2021 mark, and I think we're going to definitely cross that 2020 mark into the 2019 levels. So I do think prices are going to come down. The bubble is going to pop. Now, very different than 08, guys. Very, very different. Why? Because in 08, we had a recession brought by the house, the banks were lending money out to people way too easily, right? Like anybody could walk into a bank and they would just give you as much as you want right there in the spot. And what ended up happening is that people started getting greedier and greedier, and they started allowing for really risky loans where they almost have a variable interest rate, where you have a special discounted interest rate for the first few years, but then after a few years it triggers into a regular interest rate. So you saw people with a payment of $2,000 a month, suddenly 1 month to the next it jumped to $3,000 a month, and then they couldn't pay their mortgage and people started foreclosing. And on top of that, they started to see cracks in the market. We started to see layoffs. We didn't see the growth, and then boom, it was all hell broke loose at that moment, right? So it was basically the housing market brought the recession in a way. Now it's a lot different, because now we have inflation, and inflation, what it's doing is basically keeping all the prices down, up, and in the process, it's kind of going to shrink our economy, because the price of milk is more expensive. The price of daily consumer goods are more expensive. So people are most likely gonna not buy that extra TV, right? They're gonna say, I might hold off on that new couch. I might hold off on that new motorcycle. And when that happens at a national level, these companies like really take a big hit, with lower sales. And if they can't sell their product, then they end up having to lay people off. Remember, a lot of companies right now have to have their products expensive because of the Great Resignation, and when they wanted to bring employees back after coronavirus kind of went away, they had to hire them at a higher rate. So now their products that company produces are becoming more expensive. And if there's less people out in the market buying those products, you can see how it's creating a recipe for disaster, right? And so that's what I expect, that the next GDP growth is definitely going to be slower. And that's going to have a lot of fears in the market. And I do predict a slower Christmas season. And then as a result, I can see, come January, February, when we already are slower on the housing market, as just because of the time of the year, with the added news of, slower GDP growth and then weak holiday sales, we could see a situation, guys, where the market could crash. And if the market starts crashing, some of these real estate companies that have bought a lot of these single family homes might want to unload their portfolio. That's if their investments are basically tanking and their stock is tanking. They need to generate cash, right? They might need to generate cash by selling some of that dead weight. Anybody who bought basically in the last year, I would say that they're going to most likely be underwater. I would say anybody who bought in the last 2 years most likely is going to lose. And the key is, if it drops below 2019, I think we're like in big trouble. So I'm hoping that we just get back to these levels right here and it kind of stabilizes. I think if it goes below, then all hell would break loose. But again, that would happen over time. So I'm thinking that the economy will start recovering pretty soon. So all eyes really on what's happening with the rates, with inflation, with consumer spending. I mean, there's a lot of moving targets here, and it's all going to affect the housing market. Now, I want to just go ahead and finish this video. And by the way, I just want to say thank you to everyone who's been watching my videos and supporting my channel and leaving comments and liking the videos. It really does mean a lot to me. So I just want to say thank you guys so much. Now, if you're new to my channel and you enjoy my videos, please don't forget to smash that subscribe button and go ahead and like and leave a comment. Again, thank you guys so much for watching. I love you guys, and I'll see you on the next video.